Okay, welcome to 13-8 Explained. Before we actually get into the problem itself, I wanted to go over two things. One is what the salary expense is. We've already done it ad nauseum, so we should be able to do it frontwards and backwards. There's another type of expense that's involved with payroll that's called the payroll tax expense. These are taxes that the employer pays, some of which are matched from what the employee pays, and some are new. So we have taxes going to the federal government and to the state government and probably to the local government that comes from the deductions out of the salary expense and these payroll tax expenses that the employer matches. So for instance, we do know, and let's see if I can do this without causing too many troubles. The salary expense is what? The salary expense equals the total gross earnings of all the employees, right? Total gross. And we know what they are. We have, salary expense is going to be made up of the Social Security tax payable, the Medicare tax payable, and we know what these two together are called FICA. And then we might have, we absolutely do have, federal income tax payable. We have a state income tax payable. And we might have some voluntary deductions like a hospital insurance, but I think this problem is actually going to be mentioning union dues, which is another type of voluntary deduction from your paycheck. Not always the truth with every employer, but in this, we're going to just use that as an example. And then the last thing that's part of the salary expense is what's money's left over from the gross earnings after paying all the taxes. This is called your take-home pay. And that is going to be recorded in the cash and bank because it's money that's going to be coming from your general fund, subtracted out of that, put into your payroll account, which is essentially the money that the employees use to cash their checks with. It's their take-home pay if you add it all up. Now, there's a couple taxes that the employer will pay also, and the employer matches what the employee pays in the FICA. So that's the Social Security and Medicare tax pay. Okay? And then there's two other taxes that the employer is going to pay that the employee doesn't pay. Now, for the sake of the book, that's the rule. I'll explain that in a second. One is this federal unemployment tax, the FUTA. Remember? Sumo wrestler, 680 pounds, wearing a tie-dye diaper. Wrestling who? Wrestling the SUTA, which is the state unemployment, coming in at 570, wearing a Celtic kilt. In any case, these two taxes are paid only by the employer, the business. Caveat to that, in the real world, in some cases, the employee will also pay a portion of the state unemployment tax, and that is true for Pennsylvania, where we are at. But for the sake of the textbook, let's keep it simple, right? So, just as an example, so you can better understand it, let's just say the employee has paid $30 in Social Security tax, and they paid $20 in Medicare tax. Well, the employer is also going to be paying $30 in Social Security and $20 in Medicare tax. So how much does Uncle Sam get? Well, Uncle Sam's coming home with, well, let's see, 30-30, 60, 20-20, 40. That's how much is going into the Treasury, $100. So employees who think that their paycheck is the only thing the employer is paying is ill-informed at the very least. So that sort of gives you an idea. There's two sides to it. Salary expense, think of the employee and everything related to the employee's paycheck. Employer, they pay the payroll tax expense. So there you go. Now on to the actual problem itself of 13-8, where it's asking us to journalize the payroll transactions. As you can see here, there's two tabs, right? There's two tabs here. And one is going to deal with the salary expense, which is this one here. And the other one here is going to be the payroll tax expense, which we just explained in the just previous section. The salary expense, I'm not going to go through this again because we've done it at least 100 times. In any case, this is the skinny on that. We have the gross earnings here. So everything is predicated on the gross earnings. All the taxes are calculated using that number. And then we're going to have these different deductions. Remember, these are the liabilities that we were talking about, relative to the salary expense. And then we have the take-home pay, the total take-home pay, which is going to be your cash in bank. So here's your salary expense, and here's your liabilities, and there's your cash in bank. You can just spell it straight out. The only difference that you might see here is that under the salary expense, unlike the union dues, unlike the hospital insurance, which we've been paying on all the other examples, this case, we're paying these things called union dues. Not every employer has a union, and not every employer who has a union you have to join. Most cases you do. That's just kind of how it works in this real world. So instead of saying hospital insurance as a voluntary deduction, you're going to say union dues, and then it's going to be spelled out underneath the salary expense. Okay, through the use of some hocus pocus, I managed to put the numbers in there for you. And the only difference that I can see from other examples that we've had is when we are accounting for these union dues right here. So you're used to seeing hospital insurance as a deduction. And in this case, what's happening here is the employer is taking the money out of the employee's paycheck. It becomes a liability. And the employer is writing a check to the union as part of some kind of collective bargaining agreement. That doesn't always happen. You can possibly join a union where you have to send in your money to keep your membership up to date. And the employer is not acting like a collection agency, which I kind of think is a more responsible, more transparent way of doing things. All right, now, for the employer side of the business, we had talked about that a little bit at the very beginning when we are talking about the salary expense for the employee, and then the employer side being the payroll tax expense. This is the portion where we journalize the payroll tax expenses for the employer. We've already discussed what they are. We know that the employer also pays a Social Security tax and also pays a Medicare tax. They match what the employee pays. So let's not torture ourselves here. We know what the Social Security is going to be because we're matching it. And that's your Social Security tax. Here's your Medicare tax. Okay? So that's simple enough. You don't even have to get your calculator out to be able to figure out what those numbers are going to be. Now, the two taxes that we had talked about, we were introduced to, are the federal unemployment tax and the state unemployment tax. Just to keep your math straight, okay? The FUTA tax is how much? Well, we say it's 0.8%. So 0.8%. So what we're going to do is, as we do everything, we do build it off of the gross earnings. We take the gross earnings times it by the rate. Now this is the percent, so we need to turn it into a decimal, 0.008, and that's going to give you your FUTA. The state unemployment tax, well, that's a bit higher. That's 5.4% times your gross earnings times what? Well, times whatever that's going to turn into for a decimal, 0.054. And that'll give you your FUTA. All of this is going to equal your payroll tax expense. So the employee pays the salary, is regarding the salary expense, and the employer is paying the payroll tax expense. This is company money, not a deduction from earned earnings. So in this case, we have the payroll tax expense is going to equal. I'm not going to let you figure the numbers out before I go ahead and just give them to you. So what do we have? We have again, these two taxes right here. I kind of point that out again. That's FICA. The law was written so that the employer pays and the employee pays. You could say that Uncle Sam is in a way double dipping, and that's kind of what happens here. So we have Social Security tax payable, Medicare tax payable, the FUTA, and the SUTA. And I'm going to let you do the math on that, and I'll get right back to you. Okay, last but not least, I just want to point out the fact that the Social Security and the Medicare tax payable, which is what the employer is also matching, you can see it's written in blue right here. This FICA tax, these numbers match what the employee also paid. So whatever those times 2 are is what the federal government's getting. To make it a long story short, all of these expenses here, these payables, right, because they're going to be sitting in the payables until we actually send a check to the right people, equal payroll tax expense. I did the math real quick, 151.21, and I would double check that for yourself to make sure. In any case, the last little question down here is silly little confusing question, if you will. It's asking you to compare the Social Security tax payable and the employee's federal income tax payable and tell me what has a larger credit. The way to get around that is pop open your view under your general journal, look at the credit side, compare those two taxes, and plug an answer in down here, and you should be good to go. I realize this video ran a little long, 12 minutes and 11 seconds, but there's no shortcuts in some things, and this is one of those cases. Thank you.